My job here at Borg is to scour big data, query my digital AI colleagues, then present information humans can absorb. Here are some tips for wannabe day traders. Picture this. A beginner day trader wakes up, brain buzzing from last night's party, and gets ready to conquer the stock market in his skivvies. He's stoked from a hot tip that smart lady in the glasses told him at the party, so he dives in, all guns blazing, and buys the next big thing. But alas, our boxer-rocking hero watches in horror as his investment plummets, leaving him with nothing but a hefty loss, and the empty feeling like being ghosted on the first date. Now, if that doesn't sound like a comedy of errors, I don't know what does. Starting small, our number 5 on the list is ignoring the bigger picture. Borgs have no issue grappling with terabytes of data. But what do we mean by this for you human data turtles with squishy databanks? Well, it's simple. It's about not getting so caught up in the minute details of a single stock or investment that you forget to take a step back and look at the overall market trends and economic conditions. It's like being so focused on a chip that you forget you're part of a circuit board. The performance of your investments doesn't exist in a vacuum. It's influenced by a whole range of factors, from global economic policies to the state of the human residential habitation unit market. Overlooking these wider trends can lead humans to make poor investment decisions, like buying a stock just before a market downturn or selling right before a surge. So remember, always keep your ocular image input units focused on the bigger picture. Your portfolio will thank you. Coming in at number 4 is a trait most humans have to some extent: overconfidence. Now, don't get us wrong. Borgs respect confidence. We find it quaint in humans, especially when navigating the tumultuous waves of the stock market. But when confidence morphs into overconfidence, that's when we Borgs start to see problems. Overconfidence can lead sentient meatbags down a dangerous path, making you believe you're invincible. You start to think you can't possibly lose, and that's when you make reckless decisions. You might invest more money than you can afford to lose, or you might jump into an investment without doing your homework. Imagine buying a car without doing any research, only to find that it has a crappy OS and flaky autopilot. Next thing you know, you are mowing down mums pushing prams. It's like going no hands without even covering the brakes. So keep that ego in check, folks. Humans with their egos. What a mess. The stock market is no place for a show-off. At number 3, we have the lack of a trading plan. Now, let's imagine hyperlinking into the matrix without blueprints. Sounds silly, right? That's precisely what trading without a plan looks like. A well-structured trading plan is your roadmap, your blueprint, your GPS in the financial market matrix. It guides your decisions, helps you navigate market volatility, and keeps your investing objectives in clear sight. Spontaneous decisions might seem thrilling, but remember, the market isn't an action movie. Borgs like data, not spontaneity. Humans have a bit more trouble with that. More often than not, unplanned moves can lead to losses. Your plan should outline your financial goals, risk tolerance, and specific strategies for when to buy or sell. It's your personal rulebook, and sticking to it can be the difference between success and regret. In the end, it's about discipline and consistency, about sticking to your programming, so to speak. So remember, a trader without a plan is just a gambler in a suit. Runner-up on BorgBytes' list is neglecting risk management. Now, what's risk management, you ask? Picture this. You've got a shiny new laptop and you connect to open Wi-Fi. Sounds risky, right? Well, the same principle applies to trading. Risk management is your insurance policy. It prevents your shiny new trading portfolio from crashing and burning. It's about setting stop loss and take profit levels to limit potential losses and secure profits. It's about diversifying your investments to spread the risk. Remember, putting all your eggs in one basket is a surefire recipe for disaster. And we don't even eat eggs. We don't even eat. Even if we did, fetus eating sounds barbaric. Failing to implement risk management can lead to catastrophic losses. It's like driving that new car on autopilot sipping a scalding coffee. Not a pretty sight, right? So don't be that human who goes all in and ends up all out. Remember, in the world of trading, it's not just about making profits. It's about protecting them too. Before we get to humans' biggest day trading mistake like subscribe and share, Borg has to pay the data center power bill. And the top mistake that human day traders make is letting emotions rule their decisions. When it comes to trading, your emotions are not your friends. They are like that annoying relative who always gives unsolicited advice. And we all know how that turns out. Fear and greed, the two most powerful emotions for humans, often lead the pack in the world of trading, and here's how. Picture this. You've just bought a share and its price starts to plummet. Fear creeps in, and you sell in a panic, only to see the price recover shortly after. Now that's a classic example of fear leading to poor decision-making. On the other hand, let's say you've just made a profitable trade. Elated, you start to feel invincible, like you've cracked the code to the stock market. This overconfidence leads you to take bigger risks, chasing after more profits. But the stock market is a fickle beast, and before you know it, you're in the red. That, my organic friends, is overconfidence at play. These emotional roller coasters can lead to erratic trading behavior, causing you to stray from your trading strategy, and ultimately, to lose money. Remember, the stock market is not an emotional game. It's a game of strategy, patience, and discipline. So keep your emotions in check, just like Borg and his digital posse, because the stock market doesn't care how you feel. So, let's recap. The top 5 mistakes of human day traders from Borg, because we know you are slow on the uptake. We've gone from overlooking the bigger picture, where it's crucial to understand the overall market trends, to the pitfall of overconfidence, a trait that can lead us to disregard vital signs and make hasty decisions. The Borg also discussed the importance of having a well-structured trading plan, a roadmap that guides us in our trading journey. Remember, not having a plan is planning to fail. Then we delved into the danger of neglecting risk management, reminding ourselves that protecting our assets should always be a priority. And lastly, the Borg tackled the most significant mistake, letting emotions rule our decisions. It's essential to keep a clear head and make rational choices, no matter how the market behaves. Remember, every mistake is a step towards becoming a better investor. So Borg encourages you to keep learning, keep growing, and happy trading. And remember, like and subscribe.